Hi, in this video I will cover how to invest while there are presidential elections. I will cover three types of investments: cryptocurrencies, stocks and commodities. In each of those I will cover the major ones: Bitcoin, S&P 500 and gold. I will first cover the past so that we can see if maybe something similar will happen in the future. I will cover what happened in the last 40 years or 10 presidential elections. I will cover what happened on the day of the elections, in the week of the elections and in the month of the elections. We will now first see the S&P 500. On the day of the elections, each of the days was a green day. For example, if you went long at the beginning of the day, you would every time be in profit at the end of the day. That doesn't mean that it will happen again, but that's something interesting. Now we can see a weekly time frame, and we can see that on the week there was a different case. There was 5 of 10 green weeks, and on the monthly there were 6 green of 10. Now we will jump to the gold chart. On the day of the elections, you can see that there were 6 green days of 10. On the weekly, 7 green of 10. And on the monthly, 4 green of 10. And for example, for Bitcoin, it was here for just 3 presidential election years. And there's an interesting thing, because all of the 3 days of the elections, it was in red. So, for example, if you believe that it will happen again, you should short Bitcoin on the day of the elections, and you should be in profit on that day if it becomes a red day. On the weekly, it was 2 green and 1 red week. But on the monthly, all of the 3 times it was green on the monthly. So if you go long on the beginning of the month, at the end of the month you should be in profit. You can see that it doesn't make a lot of sense to predict the future on the behalf of the past. That's why past events don't guarantee future events, because from these numbers you can't predict if it will be a green or a red day, week or a month. Now I will tell you how I approach these presidential elections and how do I invest or trade Bitcoin, S&P 500 or gold. I like being focused on 2 things. Number 1, what I avoid. Those are trading on the days of presidential debates or public speeches. Why? Because at the candidates' debates, they tend to roast each other and say bad things about each other. That's not an issue. The issue is when that person that is being roasted tries to protect their image by saying good things and what they will do for the country. Because at 1 second they can say a good thing for the country, and in another second, because they are trying to protect their image and they are not thinking straight, they tend to say something that is maybe bad for people. And all of a sudden, from being bullish, you're all of a sudden bearish. And that's how markets behave on those days. They're suddenly bullish, they go up, and they're suddenly bearish, they go down. And if you have a tight stop loss in trading, you will most likely be stopped out, because you can't predict what they will say. The second thing, when there are public speeches, you can probably predict what they will say, because they have their speech already written, so that you can probably predict will it be bullish or bearish, but you don't actually know how people will react on certain things. And if maybe something unexpected will be said. So those days are really volatile as well. And to avoid being stopped out with a tight stop loss, you should stick to a higher time frame. The second thing that I like to focus on is technical analysis. I tend to follow the charts. Why? Because if the chart is saying to me that it needs to go somewhere, I would stick to that view. But I would stick to a higher time frame to trade it, because it leaves me more space for my stop loss to be hit, so that intraday volatility won't bother me. Now, from an investment point of view, for those who are not invested yet in Bitcoin, S&P or gold, just see these charts. What do you see? In each of these investments, you see a lifelong uptrend. Gold was here from the beginning of time and it will be here till the end of time. That's the most bullish thing that I can say. And that's enough to show you that you should be invested in gold. S&P 500 represents 500 biggest companies. There will always be bigger companies, they will always make more money and they will push the S&P 500 index up. Even if a company bankrupts, that will be an opportunity to buy the S&P 500 index lower at a discount. Because if a company bankrupts, another company will replace it. So after all, that's a good long-term investment as well. Bitcoin is still a new asset, but a valuable one. I see it going up year after year, but it's more volatile than the S&P 500 and gold. If you want to make more money, you should be in Bitcoin, but you should be careful on which price are you buying Bitcoin. If you're buying at an all-time high territory, it's risky because you don't know how much will it go up from there until it gets a bigger retracement. You should always wait for the retracement to buy. For example, I use technical analysis to know where the price needs to retrace so that it can maybe continue going up after that. And at those levels, I tend to dollar cost average in. So for those who are not invested yet, you should start dollar cost averaging. Because I see all of these three things as a good long-term investments. The conclusion is, you shouldn't be focused on what will happen in the presidential elections. You should be focused on the quality of the investment you want to invest in. Bitcoin, S&P 500 and gold I consider good long-term investments. For those who want to trade, I would stay away of day trading, especially at the candidates' debates and at public speeches, because that's too volatile for anyone who has a tight stop loss. I would stick to higher time frames to enter trades. That intraday volatility won't mean anything to you. You will protect your sanity by not trading on those days, because you can get stopped out in a blink of an eye. And remember, you want to protect your bankroll and make money from it. You don't want to gamble on intraday volatility because you think that something that they are saying is bullish or bearish. Their words will move the markets, and you shouldn't be at that time in the markets. This is my way of approaching presidential elections, not trading lower time frames, only higher time frames, and being invested long term in these three types of investments. Don't try to predict who will win or will those promises come true, and stay away of risky times. Stick to the charts and stick to the technical analysis. It is most often correct. If you like this video, please don't forget to like, share and subscribe, and see you in the next video. Like always, bye bye.